U.S. housing starts surged more than expected last month as mortgage rates fell back from their highs. Construction of new homes rose by nearly 15% to an annualized pace just over 1.5 million. That's the highest level since May. And that in turn is boosting the builder stocks today, including Meritage, Toll, and D.R. Horton. And those three names are among my next guest's top picks for 2024. He says they'll be able to weather a strong spring selling season. For more, let's bring in Joe Ahlersmeyer. He's a research analyst at Deutsche Bank. Joe, welcome. It's good to see you again. And first of all, do you mean a strong kind of traditional spring selling season could in a way be a headwind for the home builders?
Thanks for having me, Kelly. Nice to be here. What I'm really talking about is if you look at this starts number today, look, I would be really excited to be talking about this type of number in April or May, but this is a seasonally unimportant time of year, really, for builders. We're in November really talking about a number that is lower on a monthly basis than what we actually were building to in May, June, and July. And if we built to the same number next month, we're actually going to see a 9% sequential increase. That's how funky this data actually gets. So I'd caution people to kind of look at this as not necessarily indicative of a really big acceleration in starts simply because rates are coming down. I would think of it more as builders are putting inventory in the ground, preparing for a more normal spring selling season, and that's going to drive really strong cash flow in the year ahead.
All right, so that to you says that even the all-time highs we've seen for these stocks, and you've been bullish. I mean, I remember well our previous conversations where you've said, you know, they will continue to perform, and that sounds like today's data point just underscores that.
Totally agree. I mean, look, I've answered this question now, I think 3 times on the program. What do we do with the stocks at the all-time highs here? The stocks are at all-time highs. The book values, though, are also at all-time highs. So if you look at the valuations, yes, they're closer today than they were earlier in the year, but valuation on book is actually still pretty attractive relative to some of the stronger returns on inventory and returns on equity we've ever seen in the builders. You know, we put out this outlook report 2 weeks ago. We've had a lot of discussions with people about how to conceptualize valuation at a time when cash flows are much, much stronger. Balance sheets are in much better shape than they've ever been. And so should we really be valuing these things on the historical cost of inventory, or should we start to look at them more on the basis of future cash flows like any investor does with any company? We think that that's the right way to think about it. And we're looking forward to having more of those conversations as builders decide to continue to drive good free cash flow by not necessarily reinvesting in land, but returning cash to shareholders through buybacks.
What's the biggest pushback you're getting on your bullishness?
I think the biggest pushback, it's the typical, I would almost call it a lazy thesis of, look, this is how it's happened in the past. The stocks get expensive. People start talking about re-rating. The builders do something stupid. They get undisciplined. They buy something. It really does actually depend on what the builders do from here and not necessarily what investors decide how investors decide to think about it. The builders, it's actually totally the ball's in their court. If they decide to say, we'll be more disciplined, not necessarily chase bad land deals just to continue to pursue growth, but actually shrink the business potentially on purpose to drive higher value per share and higher free cash flow per share, that would really force investors' hands around valuation.